Hi, it's Lee and welcome to the Tesla Economist. Like I've been saying, I don't expect anything much in the way of earnings growth for Tesla over the next year or potentially longer, unless interest rates drop so much that demand for Teslas increase so much that they've raised the prices again and we see those 25 to 30% margins, whilst also able to ramp up Texas and Berlin around an additional 500,000 a year run rate, whilst demand increases with this extra supply. It doesn't sound that likely to me, at least at this stage, but no one can predict the future. If EVs suddenly become even more popular, or Tesla make a breakthrough with 4680 sales, or governments offer more incentives, or if gas becomes really expensive, then it's all a possibility. And they're always black swan events. But given the current trajectory, I don't see it happening. Why? Because the Cybertruck line will reduce earnings, likely until mid next year. And if that's if things go well, and once that's ramped up, then Mexico will be the next cash furnace. When Cybertruck is ramped, it might be producing $4 to $5 billion a year gross profit, when at volume production. Although this will be a nice addition to earnings, it won't take Tesla to the next level. We do have energy ramping too, but I don't think that's going to be quite as profitable as many bulls are hoping. I think it's going to be closer to 20 to 25% margins, just like Zachary Kirkhorn said on the earnings call in Q1. But there is still growth, even if it can't be seen in earnings, and the earnings are being suppressed due to growth. So we shouldn't go by earnings as an indicator of growth, and the P ratio will not be static either. Even if earnings don't do anything major for possibly even 2 years, the growth is still going to happen. Growth costs money, and I'm not just talking about the cash flow being affected by all the OPEX for investing, I mean the actual earnings and profits, because this is manufacturing. And this is manufacturing on the largest scale of the history of the world, with the biggest fabs ever constructed. What this means is they will cost a lot to run, and don't start to break even until the units produced hits high rates. I don't think Mexico break even until Tesla start producing maybe about 250,000 units a year run rate, maybe even higher. Remember, these are going to be a lower cost product too, and although margins should be good, 25% of $30,000 is a lot less than 25% of $50,000. It's a lot less contribution to cost, especially with such a large factory. Of course, labour costs less in Mexico, along with the capital most likely too. But this growth will be seen in cost of goods sold, as well as the capex. In fact, as Tesla start building factories like Mexico, and likely by the sounds of it, another one, perhaps India, Korea, Texas, Indonesia, or at least they're some of the presumed next locations, then that's going to be some insane capex, which may even mean negative free cash flow some quarters. But Tesla have a lot in reserve, so it's not a concern, and it's what investors want. It's what we want to see, more growth. 2 new gigafactories on the way is exactly what we want to see. It shows Tesla believe in the demand for their vehicles and their new product expansion. Hopefully Cybertruck line opens at the end of this quarter. We then incur the cost of running this line in cost of goods sold, which will affect margins and earnings. Then, maybe early next year, Tesla break ground on Giga Mexico. Around midway next year, Tesla should break even on the Cybertruck line, and then we should start seeing noticeable profits in Q4. Lathrop Gigafactory should be pretty much at full capacity by then too. So Q4 actually should see some record profits, until Giga Mexico opens. Then that factory is going to cost a fortune to run, and profits and margins will be affected. However, Cybertruck should still be ramping, and profits will increase exponentially once it gets to a significant run rate through economies of scale. And my theory is that that vehicle will have some high gross margins. There's a chance that the new Model 3 and Y are selling better due to these updates, and prices and margins would have increased, especially if costs have come down. I think in reality, it might just increase demand more to cover the additional supply of the Model Ys that will be coming from Berlin and Texas once further ramped. Tesla need more demand for those additional units. Hopefully they can do it partly with this refresh, partly of lowering costs and lowering prices, but I think the biggest factor is going to be interest rates finally becoming lower. And I don't think we'll see these factories significantly ramped further until about that time anyway. It's hard to say, as these are the 4680 vehicle factories. The new Gen 3 factories are using different cells. I like to speculate it will be CATL's M3P cells, and there's a lot of evidence pointing in that direction, but we never know. It might take until about mid-2025 until Mexico starts breaking even, and hopefully, if the ramp is fast, it might start contributing some decent profits by the end of the year. I'd say that about that time, the second Gen 3 Giga or Tera factory should be opening by about then, and will start to add significantly to costs too. But by this stage, Tesla would have become quite a large company, producing an annual run rate of around 3.5 to 4 million vehicles a year, and a new factory isn't likely to have as much effect on profits as it used to be. We might also assume the ramp will be faster than the Mexico factory, after what they should have learned from that. On top of that, Shanghai should have the Megapack factory running there too by that stage, again adding further to profit. I say these things won't have a major effect on profit, but in reality, profits weren't even that high last quarter, an annualized GAAP net income of just $10 billion. Yes, when these new factories and production lines come online, they will suck some of that profit out too, but when they ramp, it won't take too much to have a reasonable impact. Lathrop alone could be about $5 billion a year profit. That would account for 50% increase in earnings. Then if Shanghai Megafactory factory did the same, we've doubled earnings. Cybertruck could reach $5 billion a year sometime in 2025. And if Mexico is breaking even by about that time, then profits are up 150% when compared to Q1. I guess my point is it will take a bit of time until profits are up around that point. And bear in mind, Q4 2022 had an annualized profit of around $15 billion, and that was without tax credits or subsidies. And this is still a big shock to me, and was something that I'm happy to admit I did not see coming, and obviously gave me a big shock that profits were down so much despite the tax credits and subsidies. However, even though profits might be somewhat affected by additional costs of goods sold running these factories, it won't stop revenue growth. To me, I think over the next couple of years, revenue is going to be a more important indicator as to the valuation of this company. Margins will fluctuate depending on interest rates and various factories ramping, but revenue will keep building. And we know eventually the wind blows in our direction for whatever reason, perhaps rates dropping down to 2%, governments pushing climate change more, oil prices going through the roof, or whatever it is. We can see margins increase, and then the percentage comes back to above 20 or 25% gross margins, especially when Gen 3 starts kicking in, except instead of $100 billion or so in annual revenue, it's up to 200 or 250 billion, including the fact that energy is finally getting profitable too. This is inevitably going to happen. Tesla are not stopping building new factories and new cars. Even if we had 5 million vehicles a year with an ASP of $40,000, then that alone is $200 billion. Add energy onto that and whatever else Tesla have going on by then, and the numbers are good. 20% of 200 billion is $40 billion. That's 4 times the profit we have today, and probably achieved by around the end of 2025. Even with $1 trillion valuation, that would be a P ratio of 25. And we know that the market has decided Tesla is a technology company with a lot of AI potential, and thus the P ratio should be much higher, as of course anything could happen with FSD too. And if that is solved, then all these numbers are kind of moot, as the potential profit from that towers over these. It will be like winning the lottery. Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi. Namaste. मैं पहली बार हिंदी में बोल रहा हूं, लेकिन Verbalate इसे इतना आसान बना देता है. Or how about Spanish? Hola, vaya, increíble. También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below.